From the financial institutions' point of view, are we in a lot better shape the way we keep hearing, including from Jamie Dimon over the weekend?
David, we're significantly stronger, and the reason for that is that these institutions hold very significant amounts of capital and liquidity since the crisis. We have stronger supervision, forward-looking supervision, that I don't think we had before the crisis. We have a process of stress testing to demonstrate that these institutions are strong and can serve the economy at all times. We also have new tools that the government has that institutions have worked together on to ensure that if a severely distressed institution has the process in place to safely unwind and manage that situation as well.
So we have a new sheriff in town, as you know, President Trump, and he's appointed some different people. We have a different chair of the Fed and protects, for your point of purposes, really terribly important, Randy Quarles as a vice chair responsible for regulation. How are they changing the course of regulation?
Well, I think they're looking at the regulation that's been developed very quickly, frankly, over time, in a holistic way, and that's to ensure that the safety and soundness objectives are being met in the most efficient way possible. So if you look at the capital framework, if you look at specific rules that affect the securities markets, if you look across the board at everything that's been done, you can imagine that there are ways to make safety and soundness achievable and in a way that's less burdensome and more efficient.
So one of the things that's been addressed already, I don't know if it's sufficient, but it's been addressed, is the relative state of the big banks, the big money center banks on one hand, with the regionals and the local banks, saying that it shouldn't be equal across the board. It's too much of a burden on the more regional and local. What has not been done?
Well, I think, first of all, there in situations like this, there can be instances of overreach. I think the Congress has recognized that segments of the industry needed to have adjustments to the rules that they follow, and I think all segments of the industry have done a tremendous amount of work with the regulators to make themselves as strong as possible. I would argue that the system as a whole, from the banking perspective, has never been stronger, and for those institutions that shouldn't be subject to certain regulations, I think Congress has taken a very appropriate look and made some decisive actions in that instance, and the regulators are implementing that now.
So you said something very important there, which was the system overhaul from the banking perspective. But let's be frank, there's been a big change over the last 10 years in the extent to which we have credit intermediation, frankly, coming from non-banks. I mean, it's now something like 2/3 of all the credit intermediation. What about that set of issues?
Well, some of those issues, I think, are important to take into account as we go forward, and that's why I think the banking supervisors are looking at this, and I think regulators and policymakers need to look at the financial services industry as a whole. And to the degree that there are pockets or corners of the financial services industry that need to have additional attention, they need to do that. I do not think that the largest banks or the banking sector generally are going to be the root cause or the source of whatever the next situation is that the economy may face that affects financial services. So I think. Go ahead.
No, I'm sorry. I was just saying one of the things we just looked at was the dramatic growth in BlackRock, for example. Not just BlackRock, other asset managers, but particularly BlackRock over the last 10 years. Is it possible for Washington to have effective regulation, macroprudential regulation of a BlackRock without legislation? Because they're not a deposit-taking institution, right?
They are not. However, I think if you look at the authorities that were given, for instance, to the Treasury Department, the Financial Stability Oversight Council, which was given the responsibility of looking at the system as a whole with the information that they have, they have the ability to investigate to the extent to which more needs to be done in those non-bank sectors. But again, I think regulators generally and those who lead these institutions are not going to be complacent. I think they're going to be vigilant. And we should be for the benefit of the entire system.
Are banks, regulated banks, operating at something of a competitive disadvantage right now because they are competing increasingly on private lending and things like that in the shadow banking area without the same regulations applicable to their competitors?
Well, from a competitiveness standpoint, the banks have always undergone significant supervision and regulation. They perform in that environment. They have over time. There are other pockets of the industry, as you know, that don't undergo the same type of regular scrutiny. And again, if entities like the Treasury Department and others are able to use the tools that they have, they can address these situations. And I think planning for the next crisis is something that's a responsibility of everybody who has got any type of authority in this area. So I would expect that they are going to continue to look at this because you and other commentators have identified these other areas of the system that may need addressing.
And that leads me to my last question, which is the next crisis. You are an experienced hand in Washington with Treasury Department, with the Hill. In your opinion, where should we be looking for the next crisis? What should we be trying to protect ourselves against right now?
That's an excellent question, and I would start by saying that having gone through that period of time, I take the view that there are multiple reasons why we had a crisis and the other effects on the economy that followed. We have to be looking at all parts of the system, but I would go back to the point that the largest institutions that I represent have never been stronger. I think they're going to be a source of strength in any future period of economic distress. And we should make sure that we're looking at all other corners of the financial services industry to be aware of whatever connections are existing, that we're protected against those.